Greetings trader, welcome back to Weekly Market Outlook from XNES. Today we are going to talk about what is potentially going to happen to Nasdaq after the FOMC meeting during the week. My name is Christopher Tahir, market strategist from XNES, and joining us Stanislav Benuhov, trading specialist from XNES. Thank you, Stan, for joining us.
Hello Chris, thank you for having me today.
So what's your technical view on Nasdaq towards upcoming earning reports?
Yeah, so Nasdaq probably may rebound off the support, the area between 12,000, 12,100 as shown here on the chart, because that would be July 27, the press conference of J. Powell, and we know the so-called J. Powell effect. Whenever he speaks, equity markets tend to grow, and potentially we have the same situation for Nasdaq too. Also, if we take a look at the current wave structure of Nasdaq, we see that it has some accumulation from the buying side. We see that we have a lot of white candlesticks, bullish candlesticks going on in three waves. So usually that's an indication of accumulation going on. So from technical perspective, it looks relatively strong. However, it does not necessarily mean the big escalation of the bullish market, but at least a minor pullback might happen. It would be enough for a trader to make a wick.
So what's the narrative behind this potential outlook for this week?
So, as I've said, the first one is press conference of J. Powell. That's the most important one because inflation is really concerning thing, and economic growth is slowing down, and traders and investors want to hear what the Fed governor will say. And that probably will be the most important publication in the week. Then we have lots of earnings of big technological companies being released this week, such as Microsoft, Google, Apple, Visa, and other similar names. So usually a lot of capital is going to technological stocks, and investors are sitting on the sidelines waiting for these numbers. Previously, we've seen the positive reaction on earnings. For example, Tesla was going up 4%, Goldman Sachs had a positive earnings surprise. Not all of them, of course, but there is an expectation that corporate earnings are going to be okay this time.
So since you mentioned about the economic data and potential recession, what can traders be aware about during the week?
Well, yeah, this is a concerning situation, and most economic indicators, macro indicators, are balancing on the verge of the recession zone. So if you take a look at PMI, for example, you see that it stands above 50, which is close to the break-even point for the economy, and investors might get nervous if they get some negative pieces of information, probably some reports or something like that. Also, we have publication of GDP for the second quarter this week. That might also add up some fuel to any of these scenarios. So don't be surprised if you see sudden volatility, which will pop out of nowhere, and be prepared for that. Place a stop loss, so be ready to protect your position at all times.
So to sum up everything, so Nasdaq, we see that there's a relative strength and may rebound at the potential technical area at around 12,000 to 12,100 level. And then we would like to see Fed meetings and the press conference of Jerome Powell, which may support tech stocks, which usually potentially happens, as well as earnings of big tech companies during the week. And then another things that we also need to be aware of as a trader, we need to see the economic indicators which are on the verge of recession. So volatility may be substantially increased if especially negative factors dominate this week. Thank you, Stan, for joining us, and thank you for tuning in. Trade safe and responsibly.
Thank you, Chris. Have a good trading week, everyone.